Hi everyone, welcome to our brand new channel, Food Fitness Finance and Fun. I said brand new channel, because I have been watching videos and learning a lot on YouTube. The growth I have experienced watching videos on YouTube sparked creative passion in me to also create life-changing and impacting videos. But I rarely have enough time to create videos because of the kind of work I do. So after several years I started discussing this passion with my fellow colleagues at work. And recently, one of my colleagues made a video on how to prepare an Eritrean food recipe, and just curiously, I uploaded it. The success of the video in terms of views kicked me out of my comfort zone. I challenged some of my colleagues who are passionate of YouTube and helping others succeed in whatever endeavor they embark on, to join me to create a YouTube channel to inspire people to aim for success in life. So this channel was born. You will be hearing voices of both female and male of diverse accents. Because we are a team united for your success. In this channel we will basically be talking not just only about food and fitness, but all you need to give you maximum inspiration to come up with good and sound business or investing ideas, powerful motivations to move you and to make you take actions to bring to live your aspirations, dreams and ideas. Because you can't make wealth without health. Then, you add fun because the world's richest man said you must enjoy life and how you live it. We will be talking about travels, foods, food recipes, health, wealth-building ideas, people, events, deals, businesses, money, financial markets, stock market, crypto market, and everything that will help you to grow not only your bank account and your brand, but also your health and your wealth. Because we believe that that's the only way true happiness and growth happens. That's the only way we can make an impact in life. The only way to live a life of impact. In this channel, we will be providing you with a background of support to climb onto the shoulders of giants. You know that those who stand on the shoulders of giants see farther. There is an ancient wisdom that says we stand on the shoulders of giants whenever we make a discovery or achieve success. Our accomplishments are only possible because we can build on the knowledge gained and discoveries made by those who went before us. Sir Isaac Newton made these remarks in regards to his accomplishments, although it is believed to have been coined centuries earlier. But it is as true in investing as in other endeavors. So, in this channel, we will often refer to the wisdom of the successful investors, giants of industries and businesses. Millionaires, billionaires, athletes, sports managers, successful people worth learning from. In this video, we will be talking about a giant of investing, Warren Buffett. His rules of investing. His investment strategies. Where he is coming from. Warren Edward Buffett needs little introduction both in the world of business and investing. Warren Buffett, one of the world's greatest investors, has a long history of making sound investments and building his portfolio. He is well known for his long-term investment strategy and for being a champion of value investing. Warren Buffett has been an inspiration to countless people who aspire to become successful investors. His story is one that every aspiring investor should know and understand. He's widely known as the godfather of modern-day investing for more than 5 decades. Buffett is considered a legendary value investor because he turned a struggling textile mill into a financial engine that powers what has become one of the world's most successful holding company. Warren Buffett is called the Oracle of Omaha because of his investment prowess. Buffett has amassed a personal fortune in excess of $100 billion. He inspires legions of loyal fans to make a yearly financial pilgrimage to Omaha for an opportunity to hear him speak at Berkshire's annual meeting, an event that has been ironically dubbed the Woodstock of capitalism. But less is known about Warren Buffett's background. This is where many people miss out in understanding the big picture of this investing guru. And as such, they miss out in understanding investing. So in this video, we will uncover this investing giant of our time, from ground to the top. Leaving no stone unturned. Buffett was born on August 30, 1930, in Omaha, Nebraska, United States of America. He was the second of 3 children, and the only male child of his parents. His mother Layla Buffett was a celebrity wife. His father was Howard Buffett. His father was a stockbroker, an investor and a politician. Howard, who was a 4-term United States congressman, served non-consecutive terms on the Republican ticket, though he was believed to have libertarian views. Being the son of an investor, entrepreneurial traits and business acumen of Warren Buffett manifested early in his adolescence. Warren Buffett's enthusiasm in business, investing and making money began at a young age. He had a paper route and peddled soft drinks. He invested the profits from these ventures in 40 acres of property when he was 14 years old, which he subsequently rented for a profit. He applied to the University of Pennsylvania on his father's advice and was accepted. Buffett departed after 2 years, unimpressed, and transferred to the University of Nebraska. After graduation, his father persuaded him of the importance of education once more, encouraging him to pursue a doctorate degree. Buffett was rejected by Harvard, but admitted by Columbia. Buffett studied under Benjamin Graham, the founder of value investing. His time at Columbia University and the apprenticeship and mentoring by Graham laid the groundwork for a historic career, although one that began slowly. Graham declined to recruit Buffett after graduation, even advising him to forego a career on Wall Street. Buffett's father agreed with Graham, and Buffett returned to his father's brokerage firm in Omaha to work. He married Susan Thompson and began a family with her. Graham changed his mind and offered Buffett a job in New York a short time later. Buffett had the opportunity to build on the investment theories he had heard from Graham at Columbia once he arrived in New York. According to Graham, value investing entailed looking for companies that were selling at a significant discount to the value of the underlying assets, which he referred to as intrinsic value. Buffett had digested the principle, but he wanted to go much further. Unlike Graham, he intended to focus on the company's management team and its product's competitive advantage in the marketplace rather than the figures. He returned to Omaha in 1956, founded Buffett Associates, Limited, and bought a house. When he joined forces with Charlie Munger in 1962, he was 30 years old and already a millionaire. Their partnership eventually led to the creation of an investment philosophy based on Buffett's concept of value investing as more than a means of extracting the last few bucks from dying companies. They bought Berkshire Hathaway, a dying textile mill, along the road. When the business started to show indications of life, what started out as a classic Graham value play turned into a longer-term investment. The textile company's cash flow was utilized to fund additional investments. The original business was eventually overshadowed by the other interests. Buffett closed the textile business in 1985, but continued to utilize the name. Buffett's investment philosophy evolved into one of acquiring stock in firms that he believes are well managed and undervalued. He intends to hold the stocks indefinitely when he makes a purchase. Coca-Cola, American Express, and the Gillette Company all fit his requirements and have long been part of Berkshire Hathaway's portfolio. In many cases, he bought the company outright and left the day-to-day operations to their management teams. See's Candies, Fruit of the Loom, Dairy Queen, The Pampered Chef, and Geico Auto Insurance are just a few of the more well-known companies that fall under this category. Until technology stocks became fashionable, Buffett's aura remained intact. Buffett sat out the spectacular run-up in technology equities in the late 1990s as a steadfast technophobe. Buffett drew the disdain of Wall Street gurus and was cast off by many as a man whose time had gone for sticking to his guns and refusing to participate in firms that didn't fit his mission. Many of those experts were bankrupted as a result of the dot-com bubble's fall. Buffett's profits increased by a factor of 2. Warren Buffett was married to Susan Thompson for more than 50 years following their wedding in 1952. They had 3 children, Susie, Howard and Peter. Buffett and Susan separated in 1977, remaining married until Susan's death in 2004. Before her death, Susan introduced him to Astrid Menks, a waitress. Buffett and Menks began living together in 1978 and were married in August of 2006. Despite his multi-billion-dollar fortune, Warren Buffett is known for his frugality. He still lives in the 5-bedroom house he bought for $31,000 in 1958. He drinks Coca-Cola, and eats at local eateries, where his favorite table fare is a burger or steak. He had rejected the thought of buying a company plane for years. When he eventually got one, he dubbed it the indefensible, a nod to his public criticism of the amount of money spent on planes. But Warren Buffett makes it up by donating to charities big time. He is a big-hearted philanthropist. When you're the world's most successful investor, what do you do with your money? You give it away, if you're Warren Buffett? Buffett startled the world when he declared in June 2006 that he would be donating the great majority of his fortune to the Bill and Melinda Gates Foundation, which focuses on worldwide health, U.S. libraries, and global schools. It is one of the largest and most transparent nonprofits in the world. Buffett's contributions will be in the form of Berkshire Hathaway Class B stock. He has donated a total of 10 million shares to the Gates Foundation. It will be distributed in 5% increments until Buffett's death or until the foundation fails to achieve the expenditure requirement or the requirement that either Bill or Melinda Gates remain actively involved in the foundation's activities, whichever comes first. Buffett donated 500,000 shares worth around $1.5 billion in 2006. The entire donation to the Gates Foundation is valued around $37 billion, based on a June 2008 share valuation. Buffett anticipates a similar growth in stock price appreciation over time. Buffett's children will split a stock donation of more than 1 million shares evenly among 3 nonprofits. A further 1 million shares will be donated to a foundation established in memory of his first wife. While Buffett's gift to the Gates Foundation was unexpected, he has a long history of charity giving. Buffett's foundation, now known as the Susan Thompson Buffett Foundation, had been giving money out for 40 years. This nonprofit strives to inhibit nuclear proliferation while also supporting pro-choice family planning initiatives. Buffett has long stated that he intends to donate the majority of his fortune to charity, but only after his death. Buffett is known for his rationality, decisiveness, maverickism, and for forging his own path. I've decided what I want to accomplish, and it's time to get started. Warren Buffett's investing tips and strategies. Warren Buffett is known today as the world's greatest investor. If you had put $1,000 in his investing company when he first initiated it, it would be worth over $15 million today. Now, how did Warren Buffett achieve such a high return? It all came through smart investing and sticking to some key investing principles. There are some tips we can understand from Warren Buffett investing rules and principles. Notwithstanding that much of Buffett's investment process is proprietary, as we don't know exactly how he researches his investments. Here are some of the most important Buffett investing principles that you can incorporate into your own investing strategies. 1. Buy and hold. Money doesn't increase quickly, and you can't have a child in a month by getting 9 women pregnant. Warren Buffett is simply stating that some things take time, no matter how amazing the talent or efforts are. Long-term goals should be considered when making investment decisions. Some investors prefer futures and options in the hopes of generating quick money, but often end up losing more. Warren Buffett has never been a trader, intraday or positional. He always says, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He doesn't pick stocks based on the expectation that their prices will climb this week, this month, or even this year. Buffett buys stocks because he wants to own those businesses for the long term. He still sells stocks frequently and for a variety of reasons, but approaches most of his investments with the mindset of owning them forever. And, if you can't get into a forever mentality with your stocks, Buffett has called a set-it-and-forget-it investment like an S&P 500 index fund the best investment most people can make. 2. Understand the fundamentals of value investing. Warren Buffett is largely regarded as the finest value investor in the world. When it comes to investing, value investing prioritizes paying cheap prices for assets that have high inherent worth. The purpose of a value investor is to buy $100 worth of a company's stock for less than $100, preferably considerably less. Value investors look for and invest in firms that have intrinsic values that are significantly higher than the enterprise values represented by their stock prices. Buffett and other value investors believe that the market will eventually realize the true value of a firm that is currently undervalued, resulting in a rise in the stock price and a profit for the value investor. 3. Do your own research and think about it. Buffett spends a lot of time in his Omaha, Nebraska office. However, investors are frequently surprised to hear that he spends the majority of his time sitting alone and reading or doing nothing at all. Warren Buffett insists that a lot of time should be spent, virtually every day, doing nothing. Just sitting and thinking. Buffett considers knowledge to be something that accumulates through time, and he attributes much of his success to amassing as much investment expertise as possible. 4. Don't get lost in the crowd. Another piece of Buffett advice for new investors, especially in the age of Reddit message boards, is this: don't just buy a stock because everyone else is doing it. But don't try to be a contrarian all of the time and sell the stocks that everyone else is purchasing. The greatest approach to investing, according to Buffett, is to disregard the crowd altogether and concentrate on identifying value on your own. He also often says, temperament, not intelligence, is the most crucial attribute for an investor. You'll need a disposition that enjoys neither being in the mob nor being in opposition to it. 5. Don't be afraid of market crashes and corrections. Market corrections and collapses are nothing to be afraid of. The obvious purpose of stock investing is to purchase low and sell high, but human nature can push us in the opposite direction. When we see all of our friends making money, we feel compelled to put our money in as well. And when stock markets crash, it's natural for us to sell before values plummet even worse. When stock prices fall, Buffett enjoys it because it allows him to acquire at a lower price. Would you panic and flee if you were shopping at your favorite store and saw that the entire store's pricing were dropped by 20%? Obviously not. Buffett embraces discounts on his favorite stocks and says, "Opportunities do not come all the time. When it rains gold, put out the bucket, not the thimble." 6. Don't be afraid to sell if the scenario changes. A famous Warren Buffett quote from when he was asked about an investment he decided to sell at a loss: "The most important thing to do if you find yourself in a hole is to stop digging." Though he certainly wants to hold every stock he buys for a long time, the reality is that outlooks change. It might surprise you to learn that, a couple of decades ago, Buffett bought a large position in mortgage agency Freddie Mac. A few years before the financial crisis, he noticed the lender's management had started to take unnecessary risks with the company's capital and decided to sell. A few years later, when the financial crisis hit, it became clear that Buffett had made a smart move. 7. Diversification isn't always a good idea. Many good investors say diversification is a good idea for investment in the stock market. But Warren Buffett tends to disagree with the idea. Warren Buffett suggests diversification is for individuals who have little knowledge of investment. An experienced investor should select long-term stocks and have confidence in their investments. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Some investors diversify their portfolios because they are afraid that any one stock might sink their entire portfolio. But, while doing so, it becomes much harder to keep the focus on individual investments. They may decrease their portfolio's volatility by diversifying, but at the same moment decrease their focus on individual investments. Excessive diversification also means that a portfolio is likely invested in a number of businesses, diluting the impact from its high-quality holdings. 8. Don't be emotional. Some individuals are not supposed to own stocks at all because they are too annoyed by price changes. If you're going to do stupid things because your inventory is going down, you shouldn't own stock at all. Warren Buffett once said, "Some people aren't really mentally or psychologically fit for their own stock, but I believe more of them would be, if they were more informed about what they're actually purchasing, which is composed of a company." 9. Invest in a company whose business you understand. This is one of the most important Warren Buffett's investment tips. People invest their hard-earned money just by hearing something good about a particular company from others. You can determine if there will be any related economic issues in the future by knowing the company. In the stock market, there are many firms whose company can be understood by any ordinary individual. Buffett warns you should never invest in companies you don't comprehend completely. 10. Trust yourself to be a successful investor. Warren Buffett says that the hardest thing is to trust your investment decisions. You always think that others are right and you are wrong. Instead, you need to study and believe in yourself. "I always knew I was going to be rich. I don't think I doubted for a minute." Warren Buffett. To be successful, you need to overcome the fear and not pay attention to what others are telling you. Accumulate understanding and create investment choices to stand apart from the crowd and be a winner on your own. 11. Think like an owner. Warren Buffett said in an interview, "You have to think like an owner because it changes your whole views on stock investing." Warren Buffett says if you are going to own a new car, bike, you will think about its fair valuation, you will think about its features, and you will compare it with cars, bike offered by other manufacturers from the same segment. Then you'll decide which one to purchase after reviewing everything. Similarly, stocks should have the same view. Now, you have an insight into the life of this uncommon inventor and business giant. Think deeply, and decide how to stand on his shoulders to become a millionaire or a billionaire by investing in business. Thanks for watching.